Hello, my name is Steffen Pauls and I am the CEO and founder of Moonfare. Welcome to Deal Talk, where we bring you face-to-face with the top minds in private equity. Moonfare is the largest digital platform for investing in private equity. We offer carefully curated funds with remarkable low minimums. Joining our community of world-class investors is free and only takes a few minutes at moonfare.com. We do this to give more investors direct access to one of the most attractive global asset classes. With our Deal Talk webinars, we aim to democratize access to the knowledge surrounding it. Enjoy. Hello everybody. Welcome back to our Deal Talk series, where I interview some of the most influential deal makers and leaders in private markets. I'm back in San Francisco today. A few weeks ago, I was with Advent, and today I have the pleasure to be with Hemant Taneja, CEO of General Catalyst, a tremendously successful venture capital firm. General Catalyst is also one of the largest firms of its kind in the world. It manages more than 40 billion in assets under management and has over 800 portfolio companies, including some of the world's most known tech heavyweights, such as Stripe, Airbnb, Canva, or Snap. We have lots of interesting topics to cover today. We'll talk about the playbook General Catalyst uses for investing through uncertain times, the opportunities Hemant sees in places like Europe and India, and also why he believes market bubbles can actually be a good thing. Hemant, thank you so much for joining us today.
Thanks for having me.
Hemant, you've recently said we are in a period of peak ambiguity, and I completely agree. We live in, how I phrase it, a world that doesn't ask anymore for permission. So these times are times of great uncertainty, but also transformation and opportunity. So how are you thinking about investing when there's so much noise around us, but at the same time so much great potential for capturing long-term value?
Yeah, look, let's first talk about what is that peak ambiguity, what are we really dealing with. In the last 7 to 10 years, if you think about all the things that happened, you had social media giving rise to populism. So there's this whole sort of nationalist culture in all the countries. You've had a pandemic, you've had wars, you've had energy crises, and you've also had this dynamic between US and China where there's a reglobalization of supply chains happening. So these are pretty massive shifts in large industries. These happen to be the industries that we focus on. You think about healthcare, energy, defense, industrials, financial services. Every country is trying to figure out how to be resilient in those areas. So we know that that's going to fundamentally create new opportunity, new economic opportunity, new businesses being built that are aligned with what these new interests are everywhere in the world. The other thing that's happening is, in November 2022, ChatGPT happened. So all of a sudden, for the first time, there was a technology that every CEO in every industry, in every country was thinking about what to do with it. So hit the zeitgeist. So it's going to diffuse through society all at the same time. So now you have these ambiguous sort of shifts happening around supply chains and businesses and countries, and then you've got technology coming in with this potent force of what to do about it. And we think a lot about how do we invest with a core set of principles. I actually wrote them in my book, The Transformation Principles, that can help us navigate this ambiguity and think about this fundamental transformation that's happening economy-wide over the next 10 to 20 years.
It's all under the headline also of strategic autonomy, I guess. And
absolutely.
Europe is taking its own course, and we will talk about what kind of opportunities that offers. Look, let's talk about a little bit the environment in terms of fundraising. Venture capital has gone through quite, I would say, challenging times when it comes to fundraising over the past years. In 25, to put things into perspective, fundraising was as low as back in 2017. Despite this, you managed at General Catalyst to raise over $8 billion, I think the largest amount of money ever you have raised. How did you manage to get this done? Are you taking or have you taken a different approach compared to what you used to do some 5, 10 years ago?
So every time we raise a fund, we actually do a bottom-up analysis of what is the opportunity, the size of the opportunity, and what is the potential of our team so we can actually do it well. We can invest the capital responsibly and into the best companies. So the number actually always originates from the bottom up for us. And the way the 8 billion ended up being was, you probably saw over the last couple of years, we've really leaned into doing early stage work globally. We acquired La Familia in Europe, and we acquired Venture Highway in India with the idea that those leaders could come, be part of the senior leadership and run Europe and India for us, because we thought those were going to be very interesting markets, right? So we expanded to be much more strategic globally. The other thing we talked a lot about was how do we lean into the industries that I mentioned earlier, health, defense, energy, industrials, and what is the bottom-up opportunity in a lot of these areas. And so the way we arrived at the number was to really think about what is the right amount of capital at the pace that we're comfortable investing.
It was very much driven by this gigantic opportunity set that you're seeing due to
very bottom up.
transformation.
Very bottom up. Yeah.
Look, you call General Catalyst that I found this extremely interesting, not only an investment, but also a transformation company. In practical terms, what do you do differently from, call it, a traditional venture capital firm?
Yeah. Traditionally, venture capital, which has been a very successful industry, our roots are in early stage. We describe ourselves as at an early stage venture capital firm at our core. The roots are very much, you find the world's most ambitious people, you fund them, and you help them create the world's most important companies. And the way the business, venture capital industry monetizes is you take these companies, go public, and you exit. But if you think about the strategic autonomy, as you mentioned, and the transformation that we're going down the path of, the opportunity for these companies is far, far greater. They can be compounding for much, much longer and create a lot more value for our investors, and frankly, create a lot of societal good while doing so. So what we did was to say, rather than just invest serendipitously into companies and exit them, when these companies go public, why not have a ecosystem approach of going and transforming industries? Why not actually strategically build a set of companies that can go transform the US healthcare system? Why not strategically build a set of companies that can create resilience in Europe around AI? Sort of take these large secular opportunities and then put an ecosystem of companies together that we fund, and that we can help them work in tandem together towards compounding and driving that transformation. So we really evolved ourselves in terms of creating different ways to help these founders so they can not only create a successful company, but also transform their industry and win disproportionate market share in them.
In a way, does it mean that you are investing into industry clusters around certain themes, transformational themes?
Yes, we always believe we have this flywheel of serendipity and intentionality. Smart founders take us into new industries. 15 years ago, I got into the healthcare industry and built a company called Livongo that we exited for 6 years after starting it for 18 billion. But it taught us a lot about healthcare, but then it said, well, why not we go and now create a cluster of companies in healthcare and actually transform the system? And there's a version of that happening in all the areas that we focus on. And so we do want to think about serendipitously going into industries that are poised for change, but then being thematic about building ecosystems of companies in there so that we can capture disproportionate value.
Interesting, very, very interesting approach. Look, talking about founders and companies, your portfolio, I said it, is truly impressive. I mentioned already a couple of names, but there's more. There's also Kayak, there's Grammarly, which I use often, Discord, which is a great social app, and HubSpot, also incredible company. When you think about what all these companies and the founders behind have in common, is there any theme that you can identify?
No, absolutely. Look, the founders that we have had the good fortune of working with that have gone on to build category-defined companies, they're all great leaders. They are absolutely obsessed with learning. And so you meet them, you back them, and 3 or 4 years from then, you see them as just incredible global leaders in the way they think, the way they learn, the way they build their companies. They have this magnetic personality that attracts team, capital, customers to want to get behind them. So it becomes a movement. And they strive for excellence. You just see founders that just fundamentally get what excellence means in the context of building their company. You know, one of the most important questions I always ask founders is, why did you start this company? It tells you a lot. There's always a key insight and a key mission that is driving them. And you want to feel that kind of a soul in the company.
Yeah.
And that's very common to everybody we've backed that has gone on to do amazing things.
Amazing. Look, you're very active, and no surprise given your own personal background in India. And I heard you saying that you said India is a sleeping giant of entrepreneurship. Why is India in general so important right now? And why do you think it could emerge as a winner in this new world order?
Yeah, look, first of all, India is very entrepreneurial. So everybody there just fundamentally thinks about living an entrepreneurial life. And now that a lot of the folks there have tasted what building good technology, big technology outcomes can look like, there's been a wave of IPOs. There's a cultural movement there where kids growing up, they want to go build startups. And I think that's going to unlock a lot of latent potential, much like what we have seen in Silicon Valley. There's a lot of companies that get built in Silicon Valley are actually Indian transplants. And the reason I think India is interesting is India is not falling in we're in the US bucket or the China bucket. They're going to be the third largest economy in a few years, and they want to be their own category. And so I think there is a really important strategic role for them to play. And the demographic growing up and the growth, a lot of it being sort of indigenous, it sort of represents this ability to create new models, new opportunities in all the major industries. Yeah. Healthcare is nascent. Education needs to be sort of rethought and scaled. There's a burgeoning technology industry. All of these are areas that we understand well, and we think we can work with founders there and actually help them build category-defining companies.
Yeah, makes perfect sense to me. Look, I want to speak a little bit about one thing that is in everybody's mind, which is AI. You know this, Bill Gates called it out as a lifetime opportunity of an entire generation. I like this because I have 4 children, thinking, of course, about them. Steven Schwartzman said it's a mega trend of mega trends in investing. And today we still think in AI and non-AI. And I believe this distinction over time will disappear. There will be only AI companies. How do you see this? Do you see still AI and non-AI businesses currently as 2 separated things? Or do you consider integrating AI as a non-negotiable part of every business leader today?
Businesses that matter in the future are going to be deeply embracing AI. And I think any new companies that start today, if they're not fully setting themselves up to be AI native, great investors are not really going to be pursuing those opportunities. The big question is, when you think about the incumbent economy, which of those companies will make the transition to being AI, or will they remain on AI? And I think what's going to happen is that the companies that have the right leadership, the courage at the top, that can drive this diffusion of AI in those businesses, will capture disproportionate share in their categories. They'll actually get bigger. And the companies where the leadership is not quite deeply getting behind and just muscling it through are, I think, going to lose market share. So you're going to see this fragmentation in each category of existing competitors where the leadership that embraces AI is going to get up there, and then the leadership that is slow to move will actually lose share. We actually recently launched a company called Percepta, which is very much focused on bringing this AI transformation muscle to the companies so they can actually transform themselves. And we're just seeing that Percepta is very successful where the leadership is pushing the issues the right way. And so we have a lot of on-the-ground experience around this particular topic and how it's going to pan out.
Look, that's very much resonating with me. I told my team, everybody at Moonfare has to think as if she or he would be an AI native. Everything else is incumbents and will probably, be difficult to change. Look, talking about AI, the fundamental difference in my view between what we saw with the internet is that AI is not driven by a few garage startups from the Bay Area or somewhere. It's a battle for survival between some of the largest tech companies in the world. And I would even dare to say it's a fight for economic survival for nations. We are seeing this, the large tech companies are spending hundreds of billions, in particular in the field of AI infrastructure currently. How is this game developing in your view? Are we going to see a few new Apples and Metas and Microsofts, or will there be, basically the incumbents, the Magnificent Seven and others from the large tech companies, will they eat most of the pie?
Yeah. So I think first of all, let's think about what's going on. If you look at the level of investment, the capital expenditures going on into AI. I mean, the United States is virtually making a venture capital bet on AI, right? And that's happening in an analogous way in China and to a smaller degree in other parts of the world. The fundamental premise of how do you recover a return on that amount of investment is that AI productivity is going to eat into labor spend. We're building companies today that are showing us that. Now, if you think about the transformation of the labor spend into AI productivity, and you think about a service job in Philippines, it is going to become an AI subscription for some US company or maybe a European company. So you're going to hollow out the service economy from different parts of the world, and it's going to flow to the AI companies that become those global leaders. The US is very well positioned in that. China is well positioned in that. I think the world's kind of bifurcating into these, markets that orient around these two, large countries. And if you play that out, we have a choice. The world can be that the Magnificent Seven become, 10, 20 times bigger, each of them, but we hollow out the service economy, we hollow out jobs, and we make the rest of the society unstable. Or we can build a vibrant ecosystem on top of these AI companies and these cloud companies that create inclusive prosperity, and you're keeping the productivity gains in the geographies where the labor is melding into productivity. You need to do that if you're going to have vibrant societies everywhere in the world. So I think there's a really interesting set of questions around how economic value from AI should diffuse, so it doesn't end up in the hands of very, very few, because that is not a sustainable way. On the investment side, we think a lot about, okay, which companies we know can be built as startups and capture a lot of the value. We go towards regulated industries, or we go towards services as a software transformation. But there's going to be this constant tension of, how much of the value ends up getting put in the hands of the very, very big tech companies that are already significant, and how much is going to go and create prosperity in the different countries where AI is taking hold into the labor spend.
But maybe allow me to jump on it. Does it mean that you see a world where we have national regulation emerging to protect, so to say, the country's wealth?
I think you're seeing this whole concept of sovereign AI emerge, and the nations that are taking AI seriously and have the resources to do something about it are essentially trying to create these compute clusters locally so that this value is captured on shore. And that's an opportunity to then invest in energy infrastructure, computer infrastructure, sort of new kinds of jobs, reskilling their people so that that whole ecosystem develops in their regions. So good leadership at the country level right now is extremely important so that these countries can transition and maintain that strategic autonomy that you talked about earlier, or that can maintain economic value on shore.
Yeah. Look, despite, as it sounds, your conviction around AI, I heard you saying that you believe we live in an AI bubble. And you share this obviously with Sam Altman, who said something very similar a few weeks ago. But interestingly, you said that these bubbles are in fact good for the economy. That needs an explanation, please.
Sure. I think bubbles are good. Basically, when there's a bubble, you're essentially mobilizing a lot of capital. You're mobilizing the world's smartest people because they see the opportunity, all in the direction of trying to make a particular trend diffuse in society. Happened with the internet. Many companies were created that didn't make it, but then you also got Google and Meta and Amazon and whatnot. Happened with the cloud era, and you got all the sort of clouds that are created and the whole rise of all the SaaS companies. And I think it's happening with AI. That doesn't mean every company getting funded is going to be successful. So lots of companies will not make it, and there'll be a lot of capital lost. But overall, the companies that do make it in scale will be much, much larger. So as a time to invest, this is the most interesting time to be investing, because you are going to see some extraordinary outcomes because technology is, again, shifting this labor productivity equation. And And what a great time to be investing. So I really do think bubbles are good. I think you get some amazing category-defining companies on the other side that change society fundamentally, and that's our laser focus is on being part of those companies. So this bubbles create that opportunity.
Look, the first wave, as I call it, of investing in AI was as the same as we saw it with the internet, with cloud, mobile, etc., was in the infrastructure. That was the core of the investment, and now it's more the vertical layers. Are there any particular layers, vertical layers, that you focus on as a firm?
Yeah. So all the energy infrastructure, the AI infrastructure getting created, the best place for venture capital to play, because that's a really big game. The best place for venture capital to play where there are practical problems that founders can take from 0 to 1 and make interesting companies is actually at the applied AI layer. So we focus very heavily on the applied AI layer. Inside of applied AI, we think about what is the transformation of services. So all the jobs that were offshored for labor arbitrage, how do you bring those back onshore with AI productivity? I think that's a $1 trillion opportunity, and we're actually building a series of companies sort of focus on that theme. Then there is you need intelligence to be applied to different industries. The way AI should be used in healthcare is a whole different set of responsibility with regulatory requirements and people's safety concerns. Well, I think that's a place where a startup can go and build something. We actually incubated a company called Hippocratic AI to take that on, and it's doing very, very well in that regard. So we look for these sort of industry level problems, and we look at sort of business transformation problems, and all of those are quite interesting. And then you will also see the application of AI in consumer use cases. You'll see an emergence of new consumer companies that use AI differently and transform our experiences in society as individuals as well. So I think all that whole applied AI layer is like super interesting for the next 10 to 15 years.
Look, one of your portfolio companies, which is very, very famous in Europe, is Mistral. It's a French large language model provider that many see as Europe's best chance to compete with the US in the AI game. Given you operate deeply across those markets from India to Europe, the US, of course, do you think Europe can really catch up with the US and also to some extent with China in the long run? You said it earlier, it's more of a game between China and the US, who have built already an enormous ecosystem on a nation basis. But is there any chance, anything left for Europe?
Yeah, so I think, first of all, the amount of talent in Europe, and if you think about all the talent that created a lot of these AI innovations, a lot of it was European. So in the very long term, I think Europe, if it got its act together and became very entrepreneurial, it can compete with US and China. Being practical, it's going to be very hard. But what Europe has to do at a minimum is figure out how to make its businesses be globally competitive, which means it needs to accelerate the adoption of AI. And so Mistral is a very strategic company. We're big backers of this. Our European team is extremely dedicated to making sure this company becomes a category-defining company because it's essential to European sovereignty in AI. It's the most important company getting built. It's actually doing very well. And you can see a lot of European companies getting behind it and working with it and adopting it in their own transformation. So that actually is a really, really strategic ingredient towards European leadership in AI. I do think if Europe is really going to be successful at it, it needs to also figure out how to have its own cloud computing infrastructure. So what happened in the previous era is all the cloud workloads run on US clouds. So I think there's a lot of that technology efficiency and productivity that's flowing out of the continent. And Europe needs to figure out how to invest in that as well. Because if you have a vibrant energy infrastructure, a vibrant cloud infrastructure, and you get behind really developing local AI sovereign models like what Mistral is doing, then you have the ingredients. You can actually create the solutions that Europe's leading companies can be using to be market leaders. And that's a flywheel of innovation and adoption that can be meaningful. It's a lot of work. We are believers that in the talent in Europe, that this is doable, and we think we will be able to create a set of interesting companies out of that. And so we're making a very heavy investment in Europe. And frankly, we did this 3 years ago, and it was very contrarian. Now everybody's sort of thinking about Europe as interesting, but we leaned into this a couple of years ago, And we have terrific leadership in Europe that's guiding that strategy.
Look, it's very logical what you are saying. If this strategic autonomy is the game of the time, yeah, and obviously Europe is putting enormous, unprecedented amounts of money behind building this infrastructure. You have Fluidstack, which is working closely with Mistral, which is the pendant to CoreWeaves here in the US, and other companies emerging. We have Sakana, leading generative AI company in Japan, autonomous. When I'm in Israel, they talk about their solution, yeah, for obvious reasons. I can really follow that thinking and why Mistral could be one of the cornerstones in Europe. Look, let's talk 1 minute more about the EU. EU was the first ones coming up with a huge package of regulation. And I always said, look, they are regulating stuff before it can really develop and emerge. Potentially making European AI companies less competitive, also because of data restrictions and other laws in place. Do you also think that Europe regulates too much? And if so, from your view as an investor, how does the level of over-regulation influence where you invest?
Yeah, look, I think, so I do think Europe is heavier on regulation than it should be. To me, there's this balance between self-regulation, where companies are building with the right intention, the right mindset and mechanisms, and regulating innovation. And the more you regulate innovation, the less vibrant a future you have as a geography. Now, creating regulations around how innovation diffuses in society so people are taken care of in an inclusive way, that spirit, I actually respect, and it's very aligned with the way we think about it at General Catalyst, which is we want to create inclusive prosperity. And I think the spirit of the European regulation always, I resonate with it, but it gets done too fast when trends aren't clear on how technology is going to manifest. And I think it's done without regard for having the emerging next generation companies be successful there. It's very focused on sort of socialist dimension of it and the inclusive prosperity dimension of this, but without regard for, well, boy, are we going to regulate it in a way that the next generation companies aren't going to be built here? And that's really what has caused issues and the divergence in the EU GDP and the US GDP over the last 17 years since the financial crisis.
Look, there's another company that is talk in town in my home country in Germany. It's called Helsing. And it's a German company that develops AI-enabled defense systems. Another company, which is also part of your portfolio, Anduril, is in the meantime valued at above 30 billion or so, unbelievable numbers. When you're looking in the defense space, what type of companies attract your interest? And do you approach them differently than an ordinary SaaS company or consumer play?
Yeah, it's a great question. So first of all, when I think from a sovereign AI transformation perspective, there are 4 parts to it. We think about what's going to create peace. How do you use AI for deterrence? We think about resilience in healthcare, because given the pandemic issues we dealt with. We think about adoption of AI in businesses, and then we think about reskilling of people. So this is 4 dimensions. If there's no peace, you can't do the other 3. You just don't have a system where technology can be effective if there's no peace, because capitalism stops working. And so it was very important to us that we invest in companies that are mission-driven on driving deterrence with AI all over the world. Anduril is the first investment that we made that I led. This was in 2017 of all times. And then as we saw these trends manifest, we invested in Helsing to create that kind of an infrastructure in Europe. Just like we think Mistral is a very strategic company, Helsing is a very strategic company to prepare for deterrence in Europe. We also invested in a company in India doing the same thing called Rafi. So we took a global view of who are the founders that are really focused on driving deterrence. And as you know, investing in defense, not so much now, traditionally was very controversial for LPs, and it was controversial in our own team, should we be doing it or not. And so we developed a whole responsible defense committee and a framework around this. We said we're going to invest in teams that are focused on deterrence, not offense. And we're going to invest in teams that are focused on developing solutions and selling them to the markets that we believe are aligned with our values. And so we've looked at companies and spent a lot of time understanding their motivations, their leadership's motivations, before we invest in them. And we're proud of these companies, what they're accomplishing. I think these are These are founders that put their lives at risk, building these companies in the quest for peace for their regions. And I also think there'll be tremendous venture capital outcomes for our funds as well.
Look, you said it, defense is a new topic and quite controversial. When I think back to my time at KKR, I can't remember that we did a single deal in defense. Today is an absolute part of the thinking, not only with the private equity buyout firms, but also with venture capitalists. Is this driven by, call it, this short-term increase in governmental spending, what we are seeing in Germany, in the EU, and in other countries? Is it is it en vogue and short-term, or is this really a sustainable trend in your view?
I believe it's a sustainable trend. I believe what's happening is you're transforming the defense budgets from old ways of doing warfare to new ways that are much more effective, both from a cost perspective and an impact perspective, that are AI driven. So you've always had, in the US, we have multiple defense primes that are very, very valuable. And we have an opportunity to build the next generation primes that are technology enabled. And by the way, I think we have an opportunity to build these next generation companies in a way that they have aligned business models. The cost plus business model, which was really the way defense primes got built, is misaligned because they want to create bigger and bigger programs because that's how the businesses create value. But that's a bigger and bigger drag on the taxpayer money to drive peace. And so can we actually build this next set of companies that are much more aligned is also important. So I think this is defense is one of the largest industries in any geography, and it's an opportunity to transform it, just like it is an opportunity to transform healthcare and other industries.
Look, I want to change gears a bit and take the discussion to Moonfare's territory. When we think about some of the largest technology revolutions in the past 20 years, which was the internet and then mobile and cloud, many private investors were excluded from what was happening because they had no chance to be early in the game. You could play the Googles and Metas later over public markets, but individuals were basically left out when it comes to the private markets game. We all know this. Private markets exploded since then. The holding period of assets is going up significantly. Think about an OpenAI, which is already valued in the last employee tender at some 500 billion. So people might ask, what will be left once this company might go public for private individuals investing over the public markets? So what is your take? We are at Moonfare, as you know, we are one of the firms spearheading this democratization, opening up of private markets for private individuals. Firms, we try really to give more prosperity for more people. This is also our very much mission-driven target here. How would you like General Catalyst to be positioned in this fundamental transition of private markets?
Look, at General Catalyst, we have this framework around responsible innovation, and it's very much focused on doing well and doing good at the same time. It's a flywheel of profit and purpose. And the core pillars of responsible innovation are to drive inclusive prosperity for everybody and sustainability for the planet. Okay, those are the two things that matter the most. And I think this idea that we need to give everybody an opportunity to participate in the value creation that's happening in technology and now in the AI world is an extremely important and urgent one. So I'm a big believer in this. I think we need to create opportunity for everybody to participate. Otherwise, the risk we've talked about earlier, which is there'll be the haves and the have-nots, and the value is going to concentrate in the hands of very, very few. That is not a stable place to be as any country or as a society at large globally. So we have to do this. We have to make sure this wealth creation opportunity, which is arguably the greatest of all time in the history of humanity, is something that everybody participates in.
Look, I talked to a very famous venture capitalist. He was one of the founders of one of the best early stage firms. And he said to me, make sure that you and your family invests enough into AI now. That's probably the best protection shield that you can play. Look, unfortunately, we are almost at the end of our conversation, but there are two more questions that I have to ask you because I believe that our audience will learn from them. And by the way, my 4 children love these two questions. So the first one is, if there's any, who is your role model when it comes to business and investing, and why that person?
That's a great question. So And my chairman, Ken Chenault, he asked me that question once. And I said, I actually look at many people for inspiration on what we should be doing. And I said, I actually look up to Ken a lot because he's taught me a lot about servant leadership and how do you build a culture and frankly, an ecosystem of companies that truly embraces that. And I think I have a lot of respect for the way Warren Buffett is invested. And the reason is because of the horizon. Their whole period is forever. That's the way to think about companies. And that long-term thinking is essential for our raison d'etre, which is to build the most important companies and drive transformations. And so I really look up to him. And the last, and this one might be controversial, but if you look at this person and what they do and not what they say, Elon Musk. Because he's taken on some of the most important problems in the world and done a good job of solving them. The execution behind that is quite inspiring to me. The way we move the world towards electrification in automotive, that's an important lever to really solve climate change, focus on space, to focus on giving connectivity to everybody at scale. Those are the kinds of problems we want our founders being inspired to go build, and then we want to learn from that and adopt that in the way we build GC as well.
Look, Hemant, I said it earlier, we are living in a world that no longer asks for permission. And if there's one person that has never asked for permission, it's Elon Musk.
Yeah. No,
he didn't ask the NASA when he was building SpaceX. He didn't ask
exactly.
the automotive industry in Germany when he was building Tesla. Look, my last question is, if you would give one advice to your younger self, what would it be?
I think first of all, it directly to my own younger self is I should have gone to Silicon Valley earlier. That's why I moved in 2011 to essentially move General Catalyst to Silicon Valley and transform it into a Silicon Valley sort of first investment firm. And so that was, probably could have done that 10 years earlier than that. So I think that would have been interesting. But I think the biggest piece of advice I would say is really lean into alignment of profit and purpose from the beginning. I think when I started, when I was young and I built a company, I did it because I was excited to build a company. And it wasn't really driven by a true sense of purpose around solving a problem. And now I've seen over and over, the ones that have become the greatest companies and compound for the longest time, do good in the world. And just like if we can just, part of my goal of why I want General Catalyst to be very successful in that scale is if we can demonstrate that not my younger self is a theoretical question, but every new young kid getting in the industry, starting a company or investing will embrace it because they'll see that as the way to create the most success. That's sort of the raison d'etre, or what fuels me and the way I think about our strategy and what we're doing.
Look, very, very impressive, Hemant. Thank you so much for these views and all the insights that you have shared. I'm sure it was a conversation the audience will enjoy very much. Lots of food for thought in many regards. It was very, very interesting to talk to you in a world that is driven by uncertainty, but also offers tremendous opportunities and responsibility. As for everyone else, thank you so much for joining us today. Please also check moonfare.com if you want to listen into past deal talks or take a look into our white papers on artificial intelligence or venture capital investing or other interesting topics. I hope to see you soon at our next Deal Talk webinar. Stay healthy.